All right, so let's get started. First thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay. All right. So again, if you have any questions, I'll leave the question box open so I can look at them. If you have any questions that I can't answer relative to subscriptions and anything that whatever you happen to think about, but maybe I can't answer. Most of the technical questions and all of that about the software, I can take care of. But if there's anything to do with that administrative stuff, you want to talk to Rory. So if you just put your name and phone number in the chat box, or your Teams username, Skype's gone, so Teams username in the chat box, he'll give you a call back. And if you want to call him, there's his number, 786-732-4656. And I'll put that back at the end as well. All right, let's get started. All right, in the SPY Super, now I want to talk about the SPY Super system and how we use it. We have strategies that we use in the options room that obviously go out into the alert service as well. So the strategies we use, these are what's called swing strategies. Remember, there's two different kinds of the trading options that you do here. We're not in investment services. These are short-term trades. Typically, we have intraday trades, and then we have swing trades. Swing trades would be trades that last anywhere from overnight to maybe 3 weeks to 4 weeks out. With these swing strategies inside the room and on the alert service, these are the strategies that we use. Straight calls and puts. These are the most common one. Buying puts, buying calls, creating spreads. These are directional trades. Then we also do straddles and strangles. These are trades that are non-directional. We don't care which way the stock goes. We just want it to move a lot. So we use straddles and strangles under those circumstances. And it's important to have different strategies for different market conditions. These market conditions have been just brutal for the last couple of months. Very choppy, very herky-jerky, not an awful lot of follow-through. So you have to have strategies that you can take advantage of that. It's important to remember that when the market is just moving up beautifully and you get a nice bull market and it's just trending and trending, everybody who's trading is making money and think that they know how they think it's easy, and they think that they can just keep doing this forever. And then you run into market conditions like the last 4 or 5 months, and they keep trading like that, and of course before long they're wiped out. And that's been happening a lot. I know a lot of people who have given up trading the last 5 or 6 months. All right, so we use the straddles and strangles for non-directional. I also use debit spreads using weekly options expiration. Typically, if I do them anytime before Friday, Monday, Tuesday, Wednesday, Thursday, I'll have them expire that week. If I do them on a Friday, I would probably put them out for the next week. We have one on Caterpillar right now that we put on late Thursday that expires next Friday. And so we do this is a spread strategy. I also do what's called time spreads. Now this is a trade that we take over earnings, and it's a non-directional trade. I don't believe you should be trying to trade directionally on earnings since you don't have any idea which way it's going to go, and the premiums on the options have really jacked up high. They increase them very dramatically at the earnings time. The market makers do to protect themselves because they don't know which way the market's going to go, and they don't know that the stock's going to go, and they don't know how far it's going to go. So we have a method called time spread. Technically it's a calendar spread, and this captures the volatility crush after the earnings come out. And then we have what's called a weekly ATM strategy that we use on neutral to bullish stocks, where we sell puts at the money puts each week while maintaining a longer dated put to protect that position. This is a pretty forgiving strategy. Doesn't take a lot of management, works pretty well, but you've got to have market conditions that allow that. And then we do credit spreads to capture premium over a few weeks. When the conditions are right, then we have a setup for these. And I have videos, by the way, on all of these strategies and how to use them. So these are the swing type strategies. And if you're in the alert service, these are the kind of trades you'll see. These are what would be going out on the alert service. Okay, those are swing strategies. Now we also have what's called intraday strategies. Now, when you have a really tough market to trade swings, if you want to trade, you typically have to kind of fall back on a lot of intraday trades. I mean, we still have some swing trades, but not as many as we would in a more consistent market to trade. So in the SPY super system, we have two really, it's actually more like three, but two really good methodologies. We have what's called the SPY super system strategy. Now this is for trading very high probability trades. This catches the SPYs, the Qs, the IWM, and futures, and we even use it on stocks, and I'll talk a little bit about that. But this is an intraday trade. This is going to be, these are quick trades. You get in and get out. I can't alert on them. I typically can't even post them because they're so fast, but I do have strategies on them, and there's something you can learn, and we have a lot of people in the room using this particular strategy. These use in the money puts and in the money calls for the SPY super system strategy for both the intraday, for the intraday for on the indexes or stocks for that matter. You can also do futures on this. And then we have a strategy that I just added this past November called the OOMCAT. This is for high momentum, high volume trades. This is an intraday trading strategy that we use in very specific circumstances. I have to be clear about this. There's very specific circumstances. You don't use OOMCAT trades, which when you're using out of the money puts and out of the money calls, you have to have very specific criteria to take advantage of them. But the results can be pretty dramatic if you use them correctly, and I'll show you how those work. So these are the methodologies we use for intraday trades, right? And again, intraday trades require you to be able to make more than 3 intraday trades in a 5-day period, which means you can't be under a pattern day trader rule. If you're a pattern day trader, then you have to have $25,000 in an account or a cash account. So keep that in mind for any intraday trades. But again, these strategies are excellent for choppy markets like this. And I do want to point out the reason I'm adding this OOMCAT strategy particularly is because I'm trying to get more strategies that we can use on an intraday basis, right? And the reason is this PD2 rule, which right now requires you to have $25,000 in your account if you want to make more than 3 intraday trades in a 5-day period, is going to be changing this year. They've already approved the change. Just has to be, it has to be signed off on. The SEC has approved it already. So their minimum balance is likely going to drop from about 25,000 to about 2,000 or 2,500, 2,000 to 2,500 or so. Now this all of a sudden you can see just opens up this particular intraday trading type strategies to a lot more retail traders, millions and millions, tens of millions of them that have small accounts, $5,000 accounts, $10,000 accounts, $15,000 accounts that haven't been able to trade intraday. They could trade futures, but they can't trade anything intraday on options. All right. So this is going to again open this up to millions of new retail traders. They're going to have full access to intraday trading. And this kind of a shift, it demands more fast, disciplined, momentum-based strategies. So we're adding OOMCAT strategies now to prepare traders for a far more accessible, far more active market environment that's coming up this year. So this is going to give you another tool in your tool belt to use for intraday trades. Besides the SPY super system, you'll have the OOMCAT trades, and the OOMCATs. I'll be clear. I have a video on this. I have to be very clear. These are very, very specific setups, and I'll show you some and how unbelievably effective they are as well. But you just can't use them on anything. All right. This is just a graphic on the alert service. The alert service goes out to your phone. It's an SMS alert service. We call it Compass. It's actually a SPY super system, but the software used to be called Compass years ago. It's been changed and improved since then, but we still call it the Compass alert service. And this is what you get. You get it on your phone, and I'll go over some of the details of what it looks like, et cetera, for the alert service. Okay. Now, one thing I want to cover here before we get started is something that's really important to understand. And what's important to understand is what moves the stock, what moves the market, and what creates trends, right? And there's 2 groups of traders. There's retail traders such as myself and most likely everybody else here in the room, right? We're retail traders. We're these little bitty marbles down here, all right? It's important to understand that when we're doing the majority of the buying or selling in the market, we cannot create a trend. We can't stop a trend. We can't move the market at all, right? this is the group right here that moves the market. These are the institutions, and everybody who's heard about institutions. The institutions are made up of 4 groups. Right? They're made up of investment banks, J.P. Morgan, Morgan Stanley, Bank of America, HSBC, all the big, huge banks. The investment banks are a major leg in the institutions. But they also have, there's 3 other ones. You have hedge funds. Hedge funds have billions and billions of dollars, and they can help to drive the market. And then you have pension funds, police pension funds, state worker pension funds, billions and billions of dollars to drive the market. And the last one would be mutual funds. And that would be T. Rowe Price, Vanguard, all the big mutual funds. Again, billions of dollars that they can move the market. Now, it's important to understand that most of the institutions, especially hedge funds and investment banks, almost all of their trading, about 85% of their trading, is done through algos, algorithmic programs that they've written to look for specific conditions or specific news in the market, and that's what they trade off of. These are not humans humans write the programs, but humans aren't pushing the buttons, right? So they have a lot of algo trading. About 85% of it comes from the algos, right? And so it's important to understand that what we're trying to identify is not just our institutions, and institutions are always in the market. They're always buying, they're always, insurance companies, true, Alan, insurance companies are also have heavy investments. They're not as active, generally speaking, as like the hedge funds are, but they do invest in them, yeah. But it's important to understand that the institutions are in the trades all the time. I mean, they're buying and selling all the time. What we want to identify is when there's enough of an institutional direction, enough institutional money coming from many of these groups are pushing a stock in one direction. I mean, they can have somebody, one of them can be buying Microsoft, one can be selling Microsoft. That doesn't really create the trend. If you've got a lot of money from a group of institutions pushing the market, pushing the SPY, pushing Microsoft, pushing Tesla, that's what you want to find out. That's what's creating the trend. So that when the institutions, not just in the market, but when they're in the market in force, pushing in the same direction, that's what you want to see. And that's what you want to identify, which is what the SPY super system does, right? So that's what moves the market, and that's what we're looking for. Okay, this is a little bit off topic. I don't know, I should keep including this, but this is a blackjack table here, all right? And so here's your ace and jack of spades, nice blackjack, a couple of $100 chips. What in the heck has this got to do with trading? Well, when you're trading, if you talk to your family or your friends about wanting to become a trader, or I want to trade, I want to do day trading, or I just want to be trading stocks or options, what they're going to say to you is they're going to say it's gambling, you can't beat it, it's fixed. It's stacked against you. There's no way you can beat it. So what's the answer to that question? Is it fixed? Is it stacked against you? Well, let's take a look at how blackjack fits into this, right? So when I was much younger, I made my living playing blackjack. I was what's called a card counter, right? Which is kind of a misnomer. I wasn't counting specific cards, but I made my living as a blackjack, playing blackjack in casinos. I lived in Las Vegas, right? And what card counting was we just tracked the cards as they're removed from the deck. As the little cards removed from the deck, which is just deuce through 7, as those are removed from the deck, you end up with a lot more big cards in the deck than you normally would have. That swings the advantage to the player. As the big cards are removed from the decks, 10, Jack, Queen, Kings, and Aces, as those are removed from the deck, that increases the advantage to the house. So what we did was we just kept track of what the composition of the remaining cards was. Was it heavier with more big cards in there, or was it heavier with more little cards in there than there normally would be? That identified whether you had an advantage or whether you had a disadvantage, and then you would trade. You'd bet accordingly. You'd make bigger bets, take more hands when it was in your advantage, to your advantage, and when you take the minimum bet in one hand when it was against you, right? Just to stay at the table. So that gave us an advantage. Now, the reason I include this is trading stocks as options is very similar. It really is very similar, because without knowing what the institutions are doing, the trader has no edge, right? So in essence, they're gambling. Now, this is a big thing. You can get an edge playing blackjack. You can also get an edge trading. We have a significant edge with our methodology. But one thing to remember, and I have to emphasize this, both playing blackjack and trading stocks and options, they both require discipline and emotional control. Very important that you maintain discipline and emotional control. Discipline means following your strategies. Don't wander off onto some strategies you just see come across X or any kind of Reddit. Everybody's putting strategies out there or stocks. I see this, somebody will post a stock, Netflix is going to move up 20% today. People start jumping on these things. Discipline requires that you have a strategy, you know how to use it, and you maintain it and you stick with it. And then emotional control. This is a killer right here. Emotional control is it's really important. It's really hard to do because typically stocks are moved by fear and greed. I mean, you're in a trade, you're trading either for greed, you want to make money, or if it's going against you, you're trading out of fear. Those two things you've got to try to eliminate as much as possible from your trading. Also, anger is an emotion that if you lose on a stock that goes against you, all of a sudden you get angry and you try to double up and maybe do a revenge type trade. Again, they're going to kill your trading. All right, and even enthusiasm. If you have a few wins in a row and now you're really excited, you think that, oh, this is, I'm really on fire here. I'm going to start increasing my risk. I'm going to take more trades. That again, that's an emotional trade, and that's going to kill you. All right, so it's very important. Alan, sounds like I'm from Boston. I am. I live in Charleston, South Carolina. I've been in South Carolina for quite a long time, but I was born and raised just outside of Boston. Yep, the accent still comes through. So I consider the SPY super system our card counting system. This gives us an edge over other traders, allowing us to the ability to become consistently profitable. Because we take our money from other retail traders. We're not going to be taking our money from institutions. Please don't think that you're going to be able to beat the institutions. You can't. We just try to take our money from other retail traders, right? And the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. Again, we can identify the stocks that are being pushed by the institutions. Then we want to try to identify the very best ones of whatever group we've identified. Right, so that's how we drill down to the best ones. Okay, in the room and on the alert service, you have a couple of rules to trade by. Trade the best and skip the rest. Really sounds simple, but that's what the methodology finds for us. That's what the SPY super system finds. It trades the best and skip the ones that we don't feel are high probability. And this is really a highly overlooked criteria here, because if you skip a trade that would have been a loser, that's just as good as taking a trade that's a winner. And so skipping the rest is really important. So we don't take an awful lot of trades. We're just taking the very best. Don't feel as though you need to be trading all the time. Again, our objective is not to make trades. Our objective is to make money. That's the whole point of trading. I assume that's why everybody is in here to trade, because you want to make money. I don't think anybody's in here just to prove that they're a great trader, or they just want to have fun. We're trying to make money. So that's the objective. So we always should keep that in mind. So anytime you think you're going to take a trade because you're bored, or you feel as though I'm a trader, I need to have a trade on, remember that. Our objective is not to make trades. Our objective is to make money. Okay, and again, maintain discipline. Learn and follow the process. The process is basically just the strategies and methodology setups that we use. All right, and then remain patient. This is really probably the hardest thing for a lot of traders to do. When you're on your computer and you're watching the market, you get antsy. I mean, you get bored, and you feel as though I need to be in a trade. So you start to take trades that are borderline trades, and you'll end up basically giving away a lot of money that you made already. You might have had a couple of good trades, and in the afternoon you're bored, so you start to make trades. The next thing you know, your profits are half gone. All right, very important. So as a profitable trader, we need an edge over our other retail traders. Our big edge here is, and you're going to see in a bit here, is the SPY Super System software. This is the stuff that shows whether institutions are in the trade or not across multiple time frames. This is one that's mostly overlooked by a lot of retail traders. Trading relative strength and relative weakness. This is not RSI. Please don't confuse this with the relative strength indicator, all right? In my opinion, relative strength indicator, the RSI, if you put it on a chart, you're wasting your time, all right? I only want to know what's my relative strength of my stock, how it compares to that actual SPY, the SPY, right? Is it trading up when the SPY is coming down? It's got relative strength. If it's trading down when the SPY is going up, then it has got relative weakness. That's a big edge. It adds to your edge, and most retail traders don't use this criteria. They don't even think about this. Then you want to trade with the market trend, of course, if there is one, and buy near support and sell near resistance are very, very critical criteria. Because getting into a trade near a support level and it's moving up away from that support, your stop is going to be just below that support, which means you're not going to have a big loss if it turns and goes against you. If you're chasing a stock and it's gone way above the support level and then you decide to get in, now you're in trouble if it turns on you, because your support level is so far down that your losses are going to be so severe by the time you approach that you're probably going to get out of the trade. You can't take the pain of the loss anymore and you get out. So that's why buying near support and selling near resistance is such a critical thing. Okay, again, the compass system, which is now the SPY super system, it identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often they succeed. It does this by identifying when institutions are driving the move and when they're not, and I'm going to show you how that looks. Now, it analyzes some fairly complex trading data, obviously, but it displays the results in easily identifiable formats. This is kind of an old layout. I'll show you the new ones, but it does identify it in a color format, just 4 different colors, and that's what's going to tell you whether the institutions are in the trade or not, and if it's a very good, strong trade to take. And this visual element makes it possible for even new traders to find high probability trades. Okay. Again, how do we get an edge over other retail traders? We only take trades that are being driven by institutions. I emphasize this. Institutions aren't in the trade. We don't want to be in the trade. Now, they're not in a trade all the time, but when we get in it, we want them to be in it. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, as I just said, and we trade in the direction of the overall market. Just doing these 3 things right here is going to make you, over time, you're going to be able to become much more likely to become profitable. Again, how does this give us an edge? Well, our trades are going to be supported by institutional buying and selling. The stocks will be outperforming the SPY, and they'll be moving in the direction of the overall market. That's it. I mean, that's the major thing that we're looking for. Okay, now a couple of little things I'm going to put up here. This is the SPY super system. It's just a logo for it. We've got a couple of different methodologies these are intraday trades now. I'm talking here about intraday trades. SPY super system trades the SPY, the Qs, the IWM, and the futures. All right. Then we have one called the institutional momentum stock system. This is IMSS. This does the same thing as the SPY super system. Except it's trading individual stocks like Tesla, Microsoft, Meta, any stocks that we use. But you add one element to that, which is you don't have relative strength or relative weakness when you're trading the indexes, but you do when you're trading stocks. So that's just the difference between those 2. Okay, so again, we use the SPY super system to trade the SPYs, the Qs, and the IWM. These are intraday trading strategies. The institutional momentum stock system, IMSS. This is the same thing. It's used to trade individual stocks similar to the SPY super system strategy, but it also uses relative strength and relative weakness as one of the criteria. That's the only difference, all right? Everything else, as far as reading on the charts and taking the trades, is exactly the same. But it gives you a lot more flexibility, because a lot of times, yesterday, for example, trying to trade the SPY super system on the indexes was almost impossible. But there was a lot of trades that you could get off of intraday trades on stocks. Okay, so these are intraday trades. Now, the color coding on the SPY super system indicators are fairly simple. Right, you're going to see green, bullish strong. You're going to see blue, bullish trend. So these are both bullish. Red is bearish strong. Yellow is bearish trend, both bearish. This is what tells you whether you've got a bullish trend or a bearish trend. Okay. All right. So this is what it looks like. I'm gonna get to live charts, so you'll see the whole thing live here in just a bit. But this is the SPY Super System on Thinkorswim. Now I run it on Thinkorswim. I display it in the room on Thinkorswim all day long. I'm actually in the room from market open to market close, going over the trades and going over any questions everybody has about what stocks they like to take, would like to trade. But this is it on Thinkorswim. It also runs on Ninja, by the way. But this is it on Thinkorswim. Your indicators here are, this is the keys here. This is the actual oscillator that the SPY Super System is using for momentum. It's called the gear, but it does not have any divergence in it. It's strictly momentum, just momentum, which is what we're really interested in. All right, so here is your current time frame momentum here. This is for the time frame that you're looking at. If you're looking at a 5-minute chart, right here, this is telling you what the 5-minute momentum is. This is multi-time. On a 5-minute chart, this is 5, 15, and 45. It's looking at all three of those time frames. And this is a long-term trend. This is looking at a daily trend over the long term. And up here is your indicators that we use for trading, or the moving averages. This is the VWAP, right here, the volume weighted average price. Very important. This is a main thing. This should be on all your 5-minute charts, not on your daily, but on your 5-minute. This is the major level that the institutions use to get in and out of trades. And then we have two others here. We have the green line, which actually changes color depending on the direction. That's called the 15 EMA, exponential moving average. And above that, we have the 8 exponential moving average, the white line. Right, so all three of those can be used as support resistance levels to enter trades, right? And you'll notice that when the 8 exponential moving average is above the 15, you're in a bullish trend. When the 8 falls below the 15 EMA, you're in a bearish trend, right? So it also gives you a good indication of the direction of the market, right? On this case, it's 5 minutes. All right. So before I go into the trades, the actual live charts, etc., and cover the results and all that, I want to do Heiken-Ashi candles, because I know a lot of people come to hear about Heiken-Ashi candles. So I want to move that up front here, fairly close to the beginning of the webinar. So we're going to go ahead and do that now. If you have any questions on them as we go, please ask. Okay, so using Heiken-Ashi candles. This is a British pound, Japanese yen. It doesn't matter. This can be anything. This should even be on there. This could be Microsoft. This could be the SPY. This could be Tesla. This could be gold. It could be silver. It could be anything, right? It could be futures. This is a chart of Heiken-Ashi candles. These candles are created differently. It takes 2 candles to make a Heiken-Ashi candle. What you notice here, and this is the really important takeaway from this. The flat top candles like this, candlesticks with flat tops, that's a bearish Heiken-Ashi candle, right? Flat top candles that are created under Heiken-Ashi are bearish Heiken-Ashi candles. Flat bottom candles, candles with no tail on them, right? No lower shadow. These are bullish Heiken-Ashi candles, right? Bearish Heiken-Ashi candles, bullish Heiken-Ashi candles. All right, so that's the structure of the candlesticks. And you notice that each candlestick opens halfway up or down the previous one, like that. See how it always opens halfway up or down because it's made up of 2 candles. Same thing over here. See, halfway up, halfway up, halfway up. That's what you'll notice on Heiken-Ashi candles. All right. Now, one of the main ways to use Heiken-Ashi candles is to stay in a trend. I mean, you can see the trend here to the bullish side. You can see the trend to the bearish side. But one of the ways I use it most effectively is looking for reversals back into the original trend. If I'm bullish on a stock and I want to get long, then I'm gonna, and it's coming down, I'm gonna wait to get what's called the Heiken-Ashi reversal. So what's a Heiken-Ashi reversal? It's basically a bearish trend that is then turns into back into the bullish trend because you get a Heiken-Ashi candle to tell you that, right? So these are bearish Heiken-Ashi candles. You notice as you get down here now, you start getting a lot of wicks and tails. Now here's a bullish Heiken-Ashi reversal candle right here. It's reversing from this bearish trend, right? Because this is the first, of course, Heiken-Ashi bullish candle you've had. Now this could be an entry for a trade, but I wouldn't take this one, and I'll tell you why. This is a caveat that's important to remember. When you have a trend like this that's strong with big Heiken-Ashi candles, what you want the reversal to look like, you want to have it reverse on big candles. You want some power into that reversal. So I wouldn't take this. Now, you would have made a little bit of money on it as it popped up here, but you notice it started getting wicks and tails again. And then it moved back down again with a bearish candle, a bearish candle. Here is your Heiken-Ashi reversal candle that you want to get back into the original trend right there. Right, that is a flat bottom candle with a big, big power behind it. See how big it is? That is a Heiken-Ashi reversal candle that's telling you that the trend is reversed. It's gone back bullish again, and you can join it right here. Now, I'll tell you something about these candles. When they're forming, right, if this is a 5-minute candle, when they're forming on a 5-minute, or when they're, if the daily chart, if they're forming on a daily chart, what you're going to notice is, I get this question all the time, do I need to wait for the candle to complete before I get into the trade? And the answer is no, you don't. All right, on Heiken-Ashi candles, once you're about halfway through the construction of that candle, which would be like 2.5 minutes on a 5-minute candle, or maybe like 1 o'clock in the afternoon on a daily candle, once that flat bottom is created at that point in time, the chances of it not being there at the end of that 5-minute period or the end of that day is very, very infinitesimally small. So basically, you can join the trend. You know, you may get some pullback, but you can join it assuming that that candle will stay as a bullish reversal Heiken-Ashi candle after the close of that particular candle. So this is where you would jump into this, and then you notice you get Heiken-Ashi bullish, bullish, bullish. These are flat bottom candles all the way up. So this is the trade right here. And if you get out of, this is where you'd be getting out of the trade. You notice you get a wick and a tail here. See how you're getting a tail on the bullish candle? This is where you would exit the trade right here. All right. So that's what your trend looks like. If you happen to be bearish over here and you were riding this trend down, you're going to get out of this once it starts to put in wicks and tails like that. This would be your signal to get out of that bearish trade. This is a signal to get out of that bullish trade. But see how nicely it identifies the trend. All right. Any questions on what they look like and how you see them? And you can put these in your charts. I'll show you how you do it on Thinkorswim. But you can, every chart has the ability to do that. So don't trade when there are wicks on both sides of the candle. Yeah, Namra, that's accurate. Now the thing is, if you're in a trend, you see how you're in a trend here, and you see how you get a wick and a tail, you wouldn't exit a trade on this, right? Because you're going to get some of these occasionally in there, but that's not a something that's breaking the trend. The trade's still moving up, and then you get another one. This is what I would. You see how you get this doji candle here, and big wicks and big tails. And the candle's red, that's where you get out, right? So that's what I would look for, all right? I would look for wicks and tails. You're going to get them. See how you've got them in. See how it's basically indecision, 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 and there's your decision right there. And you're going to get obviously you're always every now and then you're going to get some small tails on these things, but one candle does not make a break in the trend, especially when the candlestick looks like that. Okay. All right, so that's kind of the highlights of using Heiken-Ashi candles, and I'm going to show you some live charts that have these. All right, so understanding again, this is just a recap of what we just said. And here's a chart. Here's the Heiken-Ashi bearish candles coming in here. It starts to move up. You don't take it here because there's not enough power. Now, if this was, let's say this was one of your support resistance levels, this blue line, and what you were looking for was you wanted to be long. You wanted to get in when the stock breaks above that level right there, right, that blue line. So here you're getting a Heiken-Ashi reversal candle right there and right there, and now it's broken through your resistance level. Now you can take the trade right there. That's where you would take it. You get in, you stay in it. Now I wouldn't get out here because now you see you got in here at this blue line. That becomes your support level, right? Okay, so there's where you would get in and it would move straight up here. You get flat bottom, flat bottom. This is the trade you'd be in. This is one we're just looking at. And you see you're getting a wick and a tail and then a red candle, you're out here. You could get out here. I probably would have get out right here. But you've stayed another couple of candles. But the thing is, you've got to make a decision. Once you've got profits in the trade, you don't want to give them back if it starts to reverse on. You don't want to sit through this. So that's what I would. That's the way I would look at that. Okay, let's see. You need your computer ID updated. I can't load the high volume candles. Loaded on my new computer. Huh, Hector? Okay, so you need to get the SPY super systems. You need to get the update on it. Okay, Rory's on here. He'll probably see this. Yeah. Yep. You can he'll see this, and I'll make sure he gets it, Hector. But he's most likely looking at it today. Can you use the 821 EMA cross with Heiken-Ashis? You can use any strategies you want with the Heiken-Ashi candles. All right. The thing that Heiken-Ashi candles does for you is it identifies, it confirms a reversal or a continuation. In other words, a Heiken-Ashi candle, because it's got two candles built into it, when the candle is completed, that candle itself is a confirmation of a reversal. So if you were using an 821 EMA cross, for example, Namra, and you get the 8 crossing up through the 21, and you get that with a Heiken-Ashi candle, that's going to give that more confirmation that that trade's going to work. Because if it's 8 breaks to 21 on a regular candle, you still got that risk that it's got to confirm, right? It's got to go through the 21 and confirm. And if it doesn't do that, it goes back again, then it would be a failed breakout or failed cross. But if you get a Heiken-Ashi candle, the likelihood of that continuing up is much higher. Okay? And I mean, you can use that for anything. I mean, I'll use it when I'm breaking support or breaking resistance, moving up. If I get a Heiken-Ashi candle, it gives me a lot more ability to confirm that's stronger. I can have a much higher confidence level that the trade's going to work. All right, so distinctions of the Heiken-Ashi candles that we just talked about. Okay, bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. All right, obviously you're going to know that. Bullish Heiken-Ashi reversals are identified by flat topped Heiken-Ashi candles followed by flat bottomed Heiken-Ashi candles. And bearish Heiken-Ashi reversals are identified by flat bottomed Heiken-Ashi candles followed by flat top candles, Heiken-Ashi candles. I want to point out one other thing here. Namra, yesterday's NQ is very difficult to trade. Trading yesterday on any of the indexes, the SPY, the Qs, the Russell 2000. If you're trading futures, you're trading the NQ. If you were trading the ES, any of those, it was near impossible to try to trade those yesterday. Very, very brutal conditions. Now we had some really nice trades, intraday trades off of stocks, because we found specific setups, and I'm going to show you some of those. That's why I like the ability to have the SPY super system also be used on stocks, right? So you can use the same strategy except you use individual stocks, and you look for the same criteria. So we've got that along with the OOMCATs, which is the out of the monies for stocks. All right, so that's why we have those things, and that's one of the, to me, all right. I know people love to trade futures. One of the drawbacks of futures, you don't really have any relative strength or relative weakness to lean against. Now, yeah, you can say that the Qs are stronger than the SPY, so I'm going to trade the Qs because they're outperforming the SPY. That is a sort of relative strength, relative weakness, but it's way weaker than looking at a stock market that's moving down, and you've got a stock that's stacking green candles. That's relative strength with that stock against the market. That is a major, major difference. I mean, that's the difference between trading futures and trading stocks. Okay, so there is your Heiken-Ashi distinctions. This is what you're looking for. Very important. I will point out, by the way, that when you get wicks on bearish candles, on bullish candles, or tails on bearish candles, with regular candlesticks, if you get a regular, this is a regular candlestick with a big wick on the top, it tends to be a little bit less bullish because it looks like we've had buyers coming in and then the sellers come in and push it down. That is not the case with Heiken-Ashi candles. Big wicks on top of bullish candles are more bullish. Big tails on the bottom of bearish candles are more bearish. Okay, that's a different that's a different criteria than you use on regular candles. Okay. Okay, so here's a recap of the advantage of the Heiken-Ashi candles. It smooths out price action, reducing noise. Yeah, noise is a real big problem for most people because most people make a big mistake. They follow their P&L, right? They're watching their P&L, and if the P&L they're making money and then it starts to go red, emotionally they're getting involved in the trade. Please don't be watching your P&L. You should not be trading off of that. You should be trading off just the price action and the technical setups, right? Because all looking at your P&L is going to do it's going to insert a motion into your trading. And anytime you have a motion in your trades, it's going to destroy the trades. You're not going to be able to trade as well, right? But so it smooths out the price action, reducing that noise. It makes identifying trends much easier. You can just see the trends more easily, and we'll see that. Improves identifying confirmation on trend reversals, as we've talked about. This is a big one, right? And it does help identify potential exits when candle bodies shrink or reversal occurs. Now, one of the things that I use when I'm in a trade and I'm getting close to where I think I'm probably going to exit, maybe I'm getting close to my profit target, then I'll switch to regular candles so I can get out at the first indication of weakness and momentum, since I'm planning on exiting the trade anyway, right? So I'll switch to regular candles when I'm going to exit the trade. Okay, now I'm going to show you a couple of just two charts here. This is my TC2000. I have a platform called TC2000 that I use for scanning trades, and I also use it for charting, right? And I look for do technical analysis in this. We have some really good scans, by the way, in the SPY Super System, which I'll show you. But this is over back in 2023. But you see this move right here on May 1st. I want you to notice May 1st. See how the stock's been coming down. You see how it bounces here, and then you get a gap up and a gap up. This is really hard to trade when you get these gaps, because when you see this move like this, that's a big move. You don't know what to do, right? You kind of get handcuffed. Right, now let's look at this exact same trade. Remember the May 1st date here, all right? May 1st date. Here's May 1st. Here's see this? Here's the Heiken-Ashi bearish candles right here. Flat pops all the way down. See the Heiken-Ashi reversal came after a doji. There's the Heiken-Ashi reversal, flat bottom right there. This was your entry to take this. You would be entering the trade on May 1st, right? Somewhere in that candle. Again, you don't have to wait till the day's over, right? You're just going to take it somewhere in that candle, right? And then this is the trade you would get, right? Nice smooth action. You get out right up here, right? So there is your flat bottoms all the way up. Nice trade right there. Now I want you to notice something. See the gap? No gap. There's no gaps on with Heiken-Ashi candles. So there's your gap. So where would you have gotten in? May 1st. This is the candle you would have got in on. Somewhere during that day is where you would get in there. And this is what you would have got. Big gap up the next day, right? Which you probably would have been tempted to take profits, because that's a pretty big move. But again, you had a regular candle. But if I look at Heiken-Ashi over here, all right, you see how I got flat bottom? See how Heiken-Ashi kept telling you, stay in the trade, stay in the trade, stay in the trade, stay in the trade. And the colors here on my TC2000 chart, these tell me that I have compression breaks. When they're pink, that's a red candle, but with a compression break. Blue is bullish candles, or green candles with a compression break. This tells me the compression is starting to pull. I'm getting compression starting to compress. The stock's price action is starting to compress. So these aren't as strong as these, and the red is not as strong as the pink. But anyway, that's what I use on TC2000. All right, so let's take a look at some live charts here and look at some Heiken-Ashi candles. Let's just look at a couple of examples from yesterday. All right, so I'm gonna bring up those charts. Hold on a second. Okay, so here's a SPY Super System. This is it right here. These are the scanners. We have cascading up here on 5-minute, cascading up on daily. This is relative strength. You're looking for relative strength. This is where you're going to find them, right? If the market's moving down, anything that's up here that's green is going to have relative strength. This is relative weakness. We have these cascading down on 5-minute and on daily. So if you're looking for a swing trade, you would go cascading up on the daily so that you can see something strong on the daily, right? And cascading down on the daily would give you bearish swing trades. Cascading up on a 5-minute and also cascading down on a 5-minute would be for intraday trades. Okay. Will the chart in NinjaTrader look the same, Hector? No, it'll look a little different. But I know they do have high volume candles in there, and they have you're gonna get the indicators the same way here, right? So you'd have to get familiar with. I mean, Ninja looks different than this does. I particularly like this toss, the Thinkorswim. I don't trade on Thinkorswim, by the way. I just use it to find stocks that I want to trade. That's all I'm using it for. I'm using it for the SPY Super System and to identify stocks that I want to take that meet the criteria, right? And then I trade them on Tradier. But you can trade it. You can trade on Thinkorswim. You can trade on Robinhood. You can trade on Tastyworks. You can trade on Interactive Brokers. Anybody you want. But this is what's going to tell you which stocks to trade, right? All right. So listen, I'm going to move this out of the way so we can get a better look. By the way, this is for swing trades. I have a one wise bull, one wise bear for swing trades. But and again, one nice things about this is if I click on this, it's going to take the trade up right away. And you see, this is a cascading up at the end of the day yesterday, GLW. And notice how strong this was at the end of it. This is a 5-minute chart. And what you're going to notice, by the way, is we color the candles on the Thinkorswim platform here. These white candles are green candles that are bullish. These are high volume candles, right? This is really important. These high volume candles, and we're going to get into that. But if I just click over here, anytime during the day, I can find stocks that look good. Okay, they got relative strength. And what does it look like volume-wise? Big volume, big volume. That's a telltale sign. Not only that we got institutions coming into these things, because you notice see how it's green down here? Institutions bullish. All right, so we'll look at that in a couple of minutes. So I want to look at some Heiken-Ashi candles. All right, and I'm going to go ahead to the daily because I want to look at these on the daily chart. All right, so there's a daily chart. All you do, by the way, to do Heiken-Ashi candles is on this platform, you just switch to the style and you go to chart type and you go to Heiken-Ashi. So this is going to produce all Heiken-Ashi candlesticks. All right, so now on a daily chart, I'm going to look at a couple that I popped up earlier, INMD. Right, so this is a Heiken-Ashi reversal candle here. This is a daily chart. Right, this is a Heiken-Ashi reversal candle. See the flat bottom right there? Right, I can try to make that a little bit bigger. There's your flat bottom Heiken-Ashi candle right there, and we're coming off of a downtrend here. All right. Now, one thing I want you to know when we're using this, just so you know, when you're using this methodology, you'd say, okay, I got a Heiken-Ashi candle. Do I want to get into this stock trade right now? One of the things that we have to take a look at, and I'm going to go over this in detail, is the current time frame momentum and the multi-time frame momentum on swing trades have to be aligned. These both need to be bullish. See, we've got blue here, that's bullish. We get yellow here, that's bearish. I would be very hesitant to take a swing trade in that particular chart. That's why you can't just use one thing like Heiken-Ashi reversal and say, okay, I'm going to go long because I got Heiken-Ashi reversal. You can't do that. It's a lot more nuanced than that. All right, so let's take a look at STNE. Oops. There's STNE. All right, now we've got another Heiken-Ashi reversal candle. But what do you see? See this here? It's too weak on the current time frame momentum on the daily, so I can't take that. So there's the thing when just because you get Heiken-Ashi reversal, you've got to find something that's likely to stand up. Okay, now here's EWZ. Now this is a Brazil ETF, right? EWZ. Doesn't make it's just like any stock. It happens to be an ETF. But look at this stock, right? And you see how it came up on big volume, and then it's moved sideways, and now you're getting a Heiken-Ashi reversal candle right here, right? Is this a good spot to go long? It sure looks like it is. All of the momentum indicators are green. The daily, the multi-day, this is 1 day, 3 days, 9 days, and then the long-term trend all moving up. This is a very good setup. I would write this down for Monday right now. I've got it written down on my spreadsheet to take as a potential trade for Monday, right? So it's really important. Now, if I switch to regular style on this, look at the candlestick, you can see even with a regular style, this looks really, really good. We're trying to break out above this 39.45. That would be, if it breaks above that, that's your line in the sand that you've got to break out on. All right, so that's what you're looking for. So you've seen some that look good and some that we couldn't take off of Heiken-Ashi candles. That's why you can't use any one thing to make a determination of whether you want to take a trade or not. You've got to take several different criteria into consideration. Right, so there's EWZ, and I have a WBS was one more. Okay, what do you see? Yep, looks pretty good. Now, you have to admit that this Heiken-Ashi candle, this is actually what's called a confirmation, because here's a big Heiken-Ashi reversal candle here. And see how it moved up, and now it's compressing. This is a Heiken-Ashi continuation candle. This is telling you this is trying to break out. And I'd be likely looking for it to go above the 73.87. Okay, and I'll look one more here on the bullish, then I'll look at a couple of bearish. COHR, how's this look? This is a pretty wild stock, by the way. This thing is fairly volatile. But here's your Heiken-Ashi candle from yesterday. Nice Heiken-Ashi reversal candle right there. This just went blue. This is good. The indicator is blue. This is green. That's good. This is green. That's good. That's when you want to write down COHR, because it meets the criteria, right? So it's an excellent setup. We'll take a look at a couple of bearish ones, and then we'll move on. Okay, here's YUMC. Right, so YUMC had a nice run up, and now we got a Heiken-Ashi reversal candle here, continuation down, and then a Heiken-Ashi reversal candle here. Now remember, yellow is high volume, so this is on high volume. But you see here, if you're trying to short YUMC, see this? Multi-time frame momentum, solid green here. You cannot take well, you should not take a short-term swing trade to the short side of YUMC right now. Again, what you're using is you're using the current price action, and then you're looking at what are the institutions doing. They're starting to sell on the daily, but they have not joined they haven't joined the parade here on the multi-time frame yet. PayX. This is one I wanted to talk about. PayX. Now this is a Heiken-Ashi candle right here, but it's not a reversal candle. This is a Heiken-Ashi continuation candle, because look at how long we've been in this trend coming down. Notice all the yellow in here, by the way. All the yellow is telling you these are high volume Heiken-Ashi candles. This is telling you this is a really big downtrend in PayX. And this is written down in my results for Monday as a potential swing to the short side on PayX. All right, so this is an excellent short setup. It tells you that, look at this, the institution has been selling this for a long time. You can see that. Is it likely to continue down? Well, you look at your daily chart and see if you've got any nearby support or resistance. But other than that, this is a really nice setup for a short PayX. And again, I would make a note of that. QDEL, one more. It's QDEL. Again, nice setup here in QDEL. Heiken-Ashi reversal continuation. It's not a reversal, it's a continuation of this already downward trend. And it's continuing down with high volume, and everything's red. Institutions are selling this thing. Beautiful potential short. I think BCP, what the heck is this one? Oh yeah, BCPC. All right, this is Balchem. Heiken-Ashi reversal right here, right? But see that? You can't go short. You shouldn't go short is what I'm saying. You shouldn't go short. It doesn't line. This is why it's important to trade the best and skip the rest. That means don't do it unless you've got some really good confirmation that the institutions are in that trade with you. Or you want to be in the trade with them. Yeah, could this work? Sure. You could take off down. You say, kick yourself, I should have been in the trade. But more times than not, it's not going to work. So that's what we're trying to do, is keep you on the side of the highest probability trades. Right, so those are Heiken-Ashi candles and how to use them. And any questions on Heiken-Ashi candles and how to use them? All right, because they really are useful. They really are useful. I will say one thing: if you're doing a very quick intraday trade, like an OOMCAT trade, something that you really have to have momentum and it needs to move fast, and you don't really probably want to use Heiken-Ashi candles because you don't really want to wait for 2 candles to begin to enter the trade. So on really quick trades, you're only going to be in for a candle or 2 candles. Probably use regular candles. Use a Heiken-Ashi for reversal with something that you can stay in a little bit longer. All right. Does it work well in IWM trading options and IWM era? Yeah, it works. I use them all the time. That's the SPY super system. It works beautifully in IWM. IWM is a little less volatile to trade than like the Qs, especially the Qs, and even the SPY. IWM moves a little bit slower usually, but yeah, I use it all the time in IWM. Listen, it works on anything that you can put in, you can put here on the up here as a symbol. right? You know, I can use it on ES, I can use it on NQ, I can use it on gold, I can use it on silver, I can use it on orange juice, I can use it on anything, copper, whatever. Eric is a good trend, IWM. Yeah, IWM does trend pretty well. Again, I've traded it quite a few times with a SPY super system. Typically, I'm not taking it overnight. I don't usually do those overnight. If I'm doing an overnight trade, I'll use something with a little bit more volatility. All right, so I'm going to switch back to the. So we looked at some Heiken-Ashi candles. All right, so let's focus here on the SPY super system, and because I'm going to show you the results when we get to the end. I'm not going to. I have a lot of results. I'm just going to go over them briefly and show you what kind of results we've been having and exactly what you can expect. But here's the color codes. We went over these already: green, blue, red, yellow. I updated the SPY super system chart. Yeah, recently I've updated it. I added the 8, which I showed you in there, and then I added the high volume candles. Right, these high volume candles were the SPY super system current momentum indicator. You use these for bullish and bearish, increases the probability of success or larger profits. If you use high volume, if you get a white candle for a bullish breakout, it's a higher probability trade because you've got institutions not just coming in, but they're coming in with some force. All right, so again, using the SPY super system indicators in conjunction with the high volume candles to find the best entries. High volume candles are white for bullish and yellow for bearish. All right, so here we go. So here is the SPY super system again. Again, here's it. We already looked at this. Here's the market internals. This is something we use. It goes to the top of every chart you bring up. It tells you nothing about what the SPY, what you're using. This doesn't tell me about the SPY. This is telling me what's going on across all 6,000 New York Stock Exchange stocks. Is the whole market trend, what we call market internals, is it bullish or bearish right now? So this tells us what the overall trend of the whole market is right now, and it applies to the 5 minutes. Do I have a scanner to find options? Yeah, like for example, on the SPY super system, and let me just flip back to that just for one quick second. All right, if I look over here, if this was during the day, let's say I'm in the afternoon, and I'm looking for a high probability trade to take, for example, a SPY super system on a stock. Or you don't, of course, you don't even need it for like if you're trading the SPY or the Qs, because all you have to do is you've only got, if you're using the SPY, you just put the SPY in there and you look to see what it's doing. But if I look over here, you see how this GLW, if I was looking for, these are Heiken-Ashi, but let me switch back to regular candlesticks. All right, so here's a Heiken-Ashi candle. This is coming up on, I mean, the regular candle. This is coming up as a GLW. This is Corning. If this is during the day, because this is right at the end of the day, you know what? Let me switch to 5 minutes because this is a 5 minutes scan here. Here's Heiken-Ashi. If you saw this, this is the GLW 5 minute candlesticks, but it's right at the end of the day, so obviously you can't trade it. But if you had this somewhere earlier in the day, this would be an OOMCAT type setup because you've got momentum and you got high volume, which means you could try a quick trade using out of the money. If you want to stay in the money, this would be called a SPY super system trade on stocks. Right? That's what it looks like. And yeah. So these scanners will find a lot of this. If I'm looking for something short, I could look over here, see how short's doing the same thing. First thing you look at when you see something like that, what's the candle color look like? Okay, it's got high volume. That gives you more confidence in it. All right. And I have other scanners in TC2000 that I use to find some of these as well. But these work really, really well. And I'll show you some that came up yesterday and how well they work. Okay, back here. All right, so there is we went over these things again. Current time frame momentum, multi-time frame momentum, long-term trend. Those will tell us what the institutions are doing across multiple time frames. Now, how do we find high probability trades? What do we, Sarah, can you show the chart of MU and tell me why you wouldn't have taken it on those first candles of the day? I got burned yesterday on it. Oracle and Frog made up for it, but I want to know what I did wrong. Okay, that's a really good question, Sarah. Let's look at MU. I'll stop just for a second to show you. All right, so let's go to MU. Okay, this is yesterday's chart on MU. right? So I want to go back and what you took it right here, I suspected, right on the open. Right now, I don't recommend ever taking trades right on the open. And if you get in this fast enough, you probably would have been okay. But here's the problem with the open. We don't have any market to lean on. Is the market? We don't know if the market's going to be bullish or bearish. So I never take any in the first 15 minutes. First of all, I wait for I wait for 3 candlesticks to go by. All right. And you took it after the 3rd candle right here on the high of the day. All right, right there. Yeah. All right. And it's too early. This is the problem. It was too early because MU wasn't the only one. There was quite a few people that got burned on these things. And I try to emphasize that I don't enter trades until after 15 minutes. Okay, I don't do that. And of course you get burned here. And if you were in a OOMCAT trade, you got a high volume reversal candle. You should have been out of this immediately if you're in an OOMCAT trade, because if you look at my webinar on this, it says the exit that OOMCAT trades on any lack of momentum, in other words, any compression or any high volume reversal, or any reversal for that much. You get out on the 4th, yeah, as soon as high volume. So you did right. The mistake is, and I mean, sometimes these will work, okay? Sometimes they'll keep on going, but you're trying to take a trade without having any market information as to what's going to happen. 15 minutes is too quick. Usually my earliest OOMCAT trades are going to be 9:50 to 10 o'clock, okay? And I probably should make that clearer when we talk about that, but there is what you're talking about right here. Okay, let me go back to the presentation. If I can find it. Yeah, there it is. Okay. All right. Oh, that's okay. I understand, Sarah. I understand. So this is what we look for. The first thing I look for on a chart. Now, if I'm going to be a swing trade, I've got to have a daily chart that corresponds to the direction I'm going. If I don't have a bullish daily chart, I'm not going to go long. It's got to be bullish on the daily. If it's bearish, I'm never going to go long on a swing trade. These are for swing trades. So daily has to align with the direction of my trade. And then I look at a 5-minute chart to see about taking an entry. Now for swing intraday trades, I'm only going to be looking at the 5-minute chart and price action. That's it, right? Because I'm not going to hold these overnight. I'm going to hold them for 1, 2, 3, maybe 5 candles, for 15, 20 minutes. That's about it. Then you want to trade with a trend, both stock and market. Now, if the market has a trend, then you typically want to go long if it's bullish. You want to go short if it's bearish. Not 100%, but most of the time, right? So if the market's moving up and your stock's moving up, that's a good sign, right? That's the trend. And especially if your stock is outperforming the SPY when the SPY is moving up, right? That would be relative strength as well, right? So then you get the SPY super system. This is a killer right here. If the SPY super system does not agree, and if you're using a swing trade, that means both the current time frame and multi-time frame need to be bullish for a long and bearish for a short. Okay. Once you determine that, then you're going to look for relative strength and relative weakness. You may find 6 or 7 or 10 stocks. Then you try to find the one or ones that have the best relative strength or relative weakness to the market. And then you're going to try to enter near support, sell near resistance. You've decided you like them. Now you've got to determine when you want to get in. And sometimes that requires waiting for a pullback to a support level. It just depends on where the price action is. So that's your whole probability trade right there. These are your high probability trades. That's the funnel that we call the high probability trade setup funnel. Now the OOMCAT trades, I do want to talk about this specifically because, and I got a video on this, so please, if you're interested, please watch that. But it's very important to make sure you follow the criteria in this. You just saw the one that that Sarah was talking about a minute ago on MU. Those are setups that we look for. OOMCAT trades, it stands for out of the money catalysts, right? Out of the money means we're going to take an out of the money put or an out of the money call. Why is that advantageous if you can do it? Because they're cheap. They don't cost much. They don't cost as much anywhere next as the in monies. And you need to have a catalyst. Why is taking out of the money dangerous? I never do it on anything unless I've got the OOMCAT criteria for intraday trades, right? I would never do it on a swing trade. I would only do it on a quick intraday trades, and that you've got to have the catalyst and you got to have the momentum, right? You got to have big volume. But these things are, if you can find them, these things are pretty spectacular most of the time. But you got to be quick. You have to be very, very quick because options will rapidly go up on these out of the money options. But I'll show you a couple of those in just a minute. All right, so that's OOMCAT. Now these are the results. I started this in November. I did a fairly long study on this thing. 170 wins, 27 losses, 86.2% win rate. Profit factor was 5.21. I just looked at it yesterday, and it's down to about 5. But that means anything over 2 on it, profit factor is huge. So these are producing some unbelievable results. Now I just based this on $500 per trade. I mean, because these are fairly inexpensive, and it produced about almost 18,000 off of these trades on $500 per trade. So I mean, if you did more than that, obviously it'd be a lot more. Typically, I use 2,000 as my base when I'm showing results for the room, but for this, I wanted to use a smaller amount because I think people that don't have big accounts or don't want to risk big money can do that. So that's the OOMCAT results there. Now I'm going to look at some live charts right here. Now this is where I'm going to look at some OOMCAT trades, and I'm going to look at a couple of swing trades and some SPY super system trades. But we're going to look at the live charts to see how the SPY super system indicators in the high volume candles, that's what HVC means, high volume candles, we're going to see these in action. This combination, the high volume candles with the SPY super system, identifies not just when institutions are buying or selling a stock, but when they're actually buying or selling with major volume. This is a major deal, right? Because having these candlesticks colored like this makes it so obvious when the institutions are getting in with some force. All right. So, and again, the live charts we're going to look at here, I want you to see some exact setups used for the SPY super system. So this would be, these are all intraday trades. SPY super system generally is for SPY, the Qs, the IWM, but you can use it for stocks. And OOMCAT trades, intraday trades. And I'll show you some of the OOMCAT trades we've taken recently. I've taken them. Most of the time, I have to say I've taken these intraday trades. I can't post them because they're too quick. But a lot of people in the room, when I see them, I call them out. I can only call them out by voice, right? So again, these high probability trade setups use the SPY super system indicators in the high volume candles on the 5-minute chart to identify these setups. This is all off of 5-minute candles. So it's, again, this combination identifies not just when institutions are buying or selling, when they're doing it with some force. And both of these very powerful intraday trading strategies have produced for me win rates over 85% as well as profit factors in excess of 4. And if you know what a profit factor is, that's very, very high. All right. So I'm going to go to some live charts here. Again, back to some live ones. I'm going to take the scanner out of the way, and I'm going to stick on these 5-minute charts. Now, this is what Micron, the one that we talked about just a bit ago. Right, but I want to show you the one that really stands out for me, because this is the one I took yesterday. Now, this was on Frog yesterday. Let me switch here to yesterday's Frog trade. Now this is SPY super system, right? And we can see Frog came down pretty hard here, right? For some reason, there was obviously some news or something right here, 110, 115. I didn't catch it there. This is not where I took it. I watched it move sideways, right? And I took it and I wrote down where I actually took it. I took it at 210, right? So I get into the trade right here on this candlestick. Notice how, see the 8 exponential moving average right there and the 15 above, right? 15 is above and there's the VWAP up there. So it's bearish. So I'm going to use that 8. I don't want it to get back above the 8, all right? I'm going to take this and I'm going to follow it down, right? So I get into the trade right here and I bought it out of the money. See, it's trading at about 41, right? I took an out of the money put on this thing. I took a $39 put, right? It's over $2 out of the money, which seems crazy, but that's what this is how these out of the monies work. I paid 30 cents for it, $30 a contract at 2 o'clock, at 2:10, right? I get out of this trade at 2:45, which is right down here, right here on this candle, right? And it kept going, actually. I could have made more money. All right, so the stock was trading at $39.60 at that point. So the option that I bought for $30 per contract, all right, and so for 10 contracts, you would have paid $300. When I exited that trade here at this level right here, those $30 contracts were $200 each. It went from $30 to $200, from 210 to 245 in 35 minutes. And you see how the high volume candles continued to show this move here, right? And again, it moved further than that. But you know, I had an order in there to take it off at 200, and I got it off 200. That's 500% profit. Now this isn't common, right? This is one that really worked well. They don't all work like this, but this is the kind of results you can get with these things, and there's been a few of them, right? So this was one from yesterday. I also did one yesterday on Oracle. All right, this was an Oracle trade. And now Oracle, we were also short. Let me go back to where we took Oracle. This is where I took Oracle, right here. Now Oracle, let me see, 1205. So I took it on this candle. See, it's compressing, and see it's breaking down. Notice the institutions obviously had to be selling, all right? I couldn't take it if they weren't. Institutions were selling. But you see what I've got here? A breakdown off of the 8 exponential moving average with a high volume candle. What's this tell me? Institutions, they've been selling, and now they're coming in with force. They're really selling this thing like crazy right here. So I jumped in here and I wrote it down to, let's see, 1235. Right, so I get out at 1235. Right here, I get out on this candle right here, and this wasn't as dramatic as that. I get in on Oracle. I get in at $72 a contract right here, and I sold this at $1.25. All right, that's 70%. I mean, I think most people would be happy with a 70% win in 25 minutes. But that's what these will do for you, if you can find the right ones. You have to be patient. And some of these trades, I mean, you could have taken a regular SPY super system trade on stocks on this and gone within the money. You could have taken it in the money, and you would have done well. Same thing as on the one for Frog, you would have done well. But the ROI was huge, and that's why these OOMCAT trades are so powerful. If you get them correct, you've got to have momentum, because we already had momentum in this to the downside, right? And you've got to have high volume. You have to have high volume, and you have to have momentum. And that's what gives you this big, huge push like this, right? So that was one. So if I just look at some stocks from yesterday, I don't even look at some of the other ones I traded. I don't know. I know I did Moderna the day before for a long. Go back and find it. Yeah, right in here. This was a Moderna trade on the previous day, I think. Yeah, previous day, Moderna. I took it here as it broke through, and I took it right there, I think. Let me see. Yeah, took it right here off the 8 on that bounce right there. Institutions buying the high volume candle, and these, by the way, these arrows I call pop signals that pop out of the box. They tell you that the stock is breaking compression. That's even gives you another leg up. But that was a Moderna trade I took right there. And I get in at 245. I get out at 345. So I was in this trade for quite a while over to here. I probably should have got out in here. I don't know why I didn't, but this compression, normally on an OOMCAT trade, you really should get out on compression. But anyway, that was one that I took. Oh, Robert, that's a good question. Robert asks, how far out of the money should you go on the OOMCAT? And in my webinar, what I said is, how much you go out of the money, you have to take a look at what you think is practical to maybe at least approach that strike price today, right? You don't want to go so far out of the money that there's no chance of it ever getting there. So how far out of the money it has to be dependent upon how much volatility the stock has. If you're trading Tesla, which moves a huge amount, you can probably go out of the money $5 or $6, maybe even more than that, right? But something that like Verizon or Microsoft, or some of the other ones, especially like Verizon and some of the Procter & Gamble, those kind of stocks, you probably only want to go out of the money by maybe one strike, no more than two. But some of the other ones you can go out to high volumes, you can go up by $5, $6. Something like AppLovin, which is hugely volatile. I've taken trades on that where I was $12 out of the money on it and still made good money on it, because it can move. The thing can move, $10 in 20 minutes. So you have to make a judgment on that. Obviously, the farther out of your money you go, the cheaper there is. But if you go too far out of the money, you're not going to. It's not going to go up very quickly in price, because it has to be able to at least appear low. It can at least approach it. you noticed on the one that I took on Frog, it actually got into the money. Okay? I hope that's clear. That's a very good question. All right, so if we just go back and we just looked at yesterday, we just looked at a few charts, you would just randomly pull up some charts. And if you have any, if you have anything you want me to look at, I'm happy to do that right now. All right, so there's Tesla, yesterday, 5-minute chart. Do I see anything here? Not really. I don't really see anything here. You notice I'm getting a lot of color changes down here. It's short here. Theoretically, you could have taken a short here for just a quick trade, but no high volume. You see that? You would have had to go in. You would have had to go in the money with the short-term short right there on Tesla. But it depends. If it was up for the day, I wouldn't even have touched it. Right. So that's Tesla. Let's take a look at like Microsoft. I'm randomly just pulling up charts here because I don't know what they look like. What happened yesterday? I didn't trade these. Here's Microsoft. Look at the color change. See, there's really no rhyme or reason here. You wouldn't take it here because you get the VWAP right there, right? So there's nothing that I see here that I would have traded. I wouldn't have touched Microsoft, and it probably wouldn't have come up with my scanner at all. Caterpillar, whoops. Caterpillar right here. Not much here to see. Get some regular short setups. But here's the VWAP, but nothing. Notice that you see any high volume candles. You don't see very many. You don't see very many. So there's no high volume candles. There's not a lot of going on with the stock. Johnson & Johnson was one that I actually added to yesterday. I'm actually long this as a swing trade on Johnson & Johnson. But this was actually a decent short setup if you wanted to just take an intraday on it right here. See the high volume candlesticks right here at 10 o'clock? Write it down. It went from 245. I didn't do this. Down to about, that's $5 drop. That would have been a tremendous OOMCAT trade right there. But again, I'm long on Johnson & Johnson. And it pulled back yesterday, but I love the daily chart on it. If I switch over to the daily chart on Johnson & Johnson, I'm gonna like what I see here, right? I got a big high volume candle yesterday, but notice it's staying above, see this 15 EMA right here? The green line, see how I come down and touched it and bounced off of it? This is still a beautiful bullish trend. And you see the institutions, they're all over this thing. So if I was going to do an OOMCAT trade on a 5-minute chart, now it would have had to be just for a quick trade. And I mean, you could have traded this short right here as well, except it didn't get to the VWAPs from here. So I think this is the only trade I think would have been a reasonable trade on this one on Johnson & Johnson. Meta, right here. Don't know if this, I mean, I don't take them early in the day. Not before 9:50 to 10 o'clock. Nothing there that looks good. Sarah, ring was nice in the morning. You didn't take it, RNG. Yeah, RNG was up earnings. If we go back there on the open, this was earnings on RNG, right? And I mean, it would have worked. I mean, it would have worked, but I wouldn't have taken it. And I wouldn't have taken up here. See these high volume candles? Remember, this high volume here is because it had earnings, right? So that was a high volume candlesticks. So there's a lot of volume coming into these. But notice after the initial gap up, notice how small the candles are, how tiny they are. So this, it's high volume, but it's not pushing it up very much. I'd be very leery of something like that. This is what is likely happens, which is this compression. And this is because of earnings that you're getting that big high volume. Robert, Meta. Yeah, I think I just showed up, just put Meta up here. Yeah, not much here yesterday. Little bit of a push. What I'd like to see, like on OOMCAT trades, is I like to see the candles stay the same color. Again, this was too early. I wouldn't have taken this because I get too many mixed colors in there on Meta. Alan, look at Geo. Is that what you're saying, Geo? Alan, Geo. Grocery outlets. All right, this is yesterday's 5-minute chart right here. A little bit of a gap down. Friday, Thursday afternoon. Here's where you're opened. Very choppy. This thing is very choppy. You notice you don't see a lot of colored candles except late in the day. And you couldn't take it short here because you get the VWAP right there. It's too close. That support is too close. How do I find, Henry, how do I find HVC? Yeah, I define high volume candlesticks as something that's more than 120% of the average volume on that candle, 120% of average. You can, you can move, some people use 110, some people use 150. I use 120. That's, I mean, it's an arbitrary number, but anything that's 120% of average volume is a lot of extra volume. Okay. All right, so there's some trades for swing trades here. Let me just look, I mean, for day trades, let me switch this over to daily for just a minute. And I want to look at a couple of day trades, daily charts, to see if there's anything for swing. And I'll take it off of this list right here. Right, so here's Nokia right here. This is my daily chart. How does Nokia look for a long here? Looks pretty good. It looks pretty good. I mean, you got to see high volume. This is the daily chart. We've had 4 days in a row of high volume candles on Nokia. So Nokia overall looks like a pretty good setup for a long here. So you look at here, I mean, it's cheap stock, but everything's green, right? IBRX, I actually traded this one in here and made some good money on it. And now it's popping again here on this IBRX. Here's OMC. I wouldn't touch something like that. Notice you got yellow here, blue here. You don't have institutional, you don't have an institutional, any confirmation of institutional involvement. There's ring. Again, this is a chase now because, yeah, it's green, but it's extended a long way from the 8 exponential moving average. AXTI, IAG. All right, so let's take a look at anything, some shorts we might have. All right, so I just pop over here and I'll do the bearish selections. Let's see what looks SoFi. Looks pretty bearish. Looks pretty good. This is a daily chart. Looks like it's breaking down right here. Looks like it's breaking down right here. Owl, I know Owl is weak. These particular stocks have kind of been getting clubbed. This Owl is a company that funds software companies for funding their any kind of debt that they need, and software companies have been getting hammered here lately. BTDR, see, nice one. PNW, another nice one. Notice the high volume on the daily. CPRT, this one you wouldn't touch. See, it came down hard, but look at where it ended up at the end of the day. It may put in a low, but it put in a high volume bounce, right? So I wouldn't touch it. HIMS looks like a decent short. KLR, we did this the other day. This was a beautiful one. This, for some reason, it doesn't have enough information to create this, but I don't really care on that one. This is a really nice short right here on KLR. Right, is HPQ. I wouldn't touch it with the green candle yesterday. Roblex. So anyway, that's what I look for off of these setups. All right. Do I do OOMCAT trades on the SPY? You know, I'll tell you, Bill, I don't. All right. Now I've messed around with it a little bit, doing it on the SPY, the Qs, the IWM, and what I found with most of the time, not all the time, the SPY and the Qs don't have the continued momentum that the stocks do, right? They will put a lot of momentum in, but when you're trading the SPY and the Qs, especially if you're trying to trade out of the money calls and out of the money puts on the SPYs and the Qs, any kind of a little pullback, even just on a 1 minute basis, any kind of a little pullback is going to destroy the premiums on them. So I typically go one strike in the money on SPY super system trades on the indexes, okay? And I'll actually, after about 1:30, 2 o'clock in the afternoon on the SPY super system on the indexes, I'll switch to the next day's expiration. Not planning on holding overnight, but I want to defend myself a little bit against any time decay as if the stock moves sideways. All right. Okay, so there we are. There's some trades that we took. Again, I think we've seen a lot of this, but here's the information. This was an NVIDIA trade we took a while back. This was before I had volume candles on there. This was a SPY super system trade on the NVIDIA on a 5-minute chart. Took it right here. See how it went from selling to buying. Took it right here as it broke above the VWAP and the 8 and wrote it up right up there. Pretty nice trade. And this was a SPY trade right here. Again, see how it went selling, the buying to selling right here. This is where I took it as it broke down below the VWAP and the 8, and I wrote it down. I don't know how far I wrote this down, but That's a nice trade. If you get in here, you wouldn't want it to close back above the 8 exponential moving average. All right, another nice trade of the SPY here. Again, selling, buying, popping above the VWAP, take it right there. Obviously, you get out right there. So just a couple of things to throw a little humor here. And I've tried to impress upon you that you don't want to have emotion in your trading. Really important not to have emotion in your trading. This is somebody here that's trading with emotion. He's looking at his P&L. He was in a trade that went his way. It was up $300 on it, and then it pulled down. And it was down $100, and then it bounced up and it was up $50, and now it's down $400. He's not looking at his indicators. He's not looking at anything. He's looking at his P&L, and he's sweating bullets here because he doesn't know what to do. He has no idea what to do, right? So what you're going to do when you're in this kind of an environment, when you're trading off of emotions, as soon as you can't take the pain of the loss, regardless of whether you should get out or not, you get out, right? Or if you saw it jump back up above to a profit of $50, even though he should be staying in the trade, he'll take the trade off because he's relieved. Now he's relieved that he's not losing money. That's trading with emotion. Or he jumped into a trade that he heard somebody tell him it was going to jump up 20% today. He jumped in on the open, chased it up. It was way, way extended before he get into the trade. As he get into the trade, and then it turned around. Now it's heading back down again. He doesn't know what to do, right? He has no idea what to do. If it goes all the way back to support, he's going to lose half of his money, and he just doesn't know what to do. This is what you don't want to be, right? You got to do everything you can to protect against that. This is what happens. This is how you feel if you, and you listen, you don't win every single trade, but you have confidence that the trades you're taking are likely to be profitable, and over time they will be. Okay? And again, I'm just kind of saying here, process before profits. Learn the strategies, learn the indicators. You learn how to use them. Stick to those strategies. That's the criteria, probabilities. That's the process of finding the good trades. Focus on this and learn this before you start looking at your P&L. Whether you lose money on a trade or make money on a trade doesn't tell you whether it was a good trade or not. It just tells you whether you made money or lost money. The worst thing that can happen to a lot of new traders is they'll take a trade. It's a terrible setup. They make money on it. They think that it works, and they repeat it over and over again until they lose all their money. Okay, now the alert service, it's designed for day trades and short-term swing trades. Obviously, we're not an investment service. It's designed for traders who can't watch the market all day or don't want to. Real-time alerts are the highest probability trade setups, and the highest probability trade setups are institutional involvement, market internals, and technical analysis. Now, all the trades that I send out to the alert service are structured to be able to be kept overnight. I don't always keep them overnight, but if you're in the trade, you can likely keep it overnight because it's structured that the daily chart is bullish or bearish and is likely to continue that way. Now, this market has been very hard. I pulled way back on the number of swing trades I do because we've had so many gap ups and gap downs in the SPY. And I'm going to show you a chart that shows you that in just a minute. But this is what the swing trades come from, right? This is my equity curve. You know, I don't like to talk about myself. This is if you put 2,000 into each trade this year on 2025, which you would have done. All right, so we're going to look at the trade results. Before I do that, I'm going to show you something, right? I'm going to show you, this is my TC2000. This is a much easier chart to actually identify what I'm going to show you. Right now, this is the SPY, and I got a lot of lines on here. These are high volume support resistance level lines, all these lines, but don't pay any attention to that. Look at the market here. You see this back here in May, right? You see the move up in here in May, in June, in July. See how that's a trend. That's a trending market. Everybody's making money except people who thought that they should go short because of the tariffs, that's another whole story. People listening to people on the web and everything, thinking that the market's going to crash, so they're all going short, and they missed this whole move. But see how smooth that is, right? Yeah, you have some pullbacks, but it's fairly smooth. It continues up, right? Compare that to what we've got now, right? This is the market from back here in November, right? Big drop down is tariff news, comes down to the 50-day moving average. Look at this speed recovery, but look, it's all gaps, right? You get up here, and if you were short here, you get clobbered. If you move up here and you get long, you get smoked again. It came right back down again here. Okay, and then look at gapped right back down again to the 50-day moving average, then gapped up the next day, right? and then it sat there, and then it pulled right back down. Look at this drop on here. If you get long here, you're destroyed the next day. This is why swing trading is so difficult. I'm telling you, I've been trading 17 years. This is the most difficult trading environment I've ever seen for trying to swing any kind of swing trades. Intraday trades, because we've got such good strategies, are working beautifully. But this is a nightmare, right? Comes right back down again, hits the 100-day moving average and bounces off the 100 right here. Look at this candle. This wiped lots of people out. So they get long and they ride this up, right? This was okay. You had a few days in here, and then you get up here, puts in a new high, right back down again, right? Right back down below the 50-day moving average. Right here, it looks like you should be short. At the end of this day, it looks like you should have been short. But no, you get a gap up the next day, and it moves up, and then it reverses right back down again. Up again to the all-time high, big, huge gap down. This is impossible trading environment for swing trades, basically impossible. And so this is where we are now. This is what happened yesterday. Look at this. Looks like we should be short, right? Then we put this candle in off the 100-day moving average. Looks like we should be moving up. We move up to the 8 and the 15, and then we put this big candle in yesterday. Where are we going from here? I don't have any idea where we're going to go from here. Very, very difficult to tell. I don't make predictions anyway. I don't make predictions on the market. Okay, so that's you have to know what kind of a market you're trading in. So, and you've got to adjust your trading to whatever the market's giving you. We can only take what the market gives us. And if people are doing a lot of trading right now, a lot of traders who've been trading for many years who they basically gave up trading. Okay, so SPY Super System results. This is the results we've had with the SPY Super System over the last few years. This was 2023. We did a little over 60,000 on 2,000 per trade. All right, 2024, 55,000. 2025, 55,000. This was taking 2,000 each trade we took in the room for the whole year. All right, just a couple of highlights here. This was back last year in March when they put the tariffs on, took the tariffs off. We just had 4 trades on in the room and in the alert service. We were short Broadcom, we were short Nike, we were short Sarepta, we were short NNE. It's a little nuclear company. In at 75, out at $1.04. That's $75 a contract, out at 104. Nike, we clobbered it because we took this and they put the tariffs on. We were in at 285 a contract. We closed it for $9 a contract. And this is not normal. This is not normal. This is huge. Usually the only kind of percentages you see like this are on OOMCAT trades. You'll see them on OOMCATs, but not normally on trades. We had Sarepta in at 450, out at 8. All right, and 78%, and then NNE 25% profit. That's fairly normal. Okay, and this was January. I haven't completed it all yet. This was January. We didn't do a lot of trades. You can see only 15 trades, 13 and 2, produced a little over 2,000. It's pretty low for us. Usually we produce double that, but that was what it was. This was January, February, and March 2025 right here. And I'm not going to go into a lot of detail on this. I want you just to see the win rates, and obviously we're profitable. The thing I do want you to see, though, is on the trades we take, and this happens to be made, what kind of percentage you can expect on the trades that we take, right? And you can see that we're not talking about huge profits here, but these are really big if you keep stacking them one on top of another. 24, 20%, 28, 26, 71, 50. This is the kind of results you're going to see from the alert trades and the trades in the room that I alert on, that I put in, that I post in the room. This has nothing to do with the SPY Super System intraday trades on the OOMCAT trades. Those results are going to be based on how you trade it. I mean, I can show you what my results are, but I can't show you what, since I can't post them, I can't say, okay, this is what you would have made. But you know that you can they make a lot of money. All right, this was June. I was on vacation a couple of weeks, just 10 and 1, 91%, 37.90. July, last July was a huge month for us. We did a lot of trades. The market was actually trending pretty nicely. And again, we had 30 wins, 3 losses, 91% win rate, up 16,000, 829. August, 84% win rate, 59.60. I mean, the profitability is almost always dependent upon what market conditions you're in. Trending markets are going to give you a lot more results higher results than choppy markets. September, pretty nice run in September, 21 and 4. October to December, I just accumulated these. This is this year. past year, 45 and 9, 83% win rate, only 47, 48, not very good. And again, as I just showed you what the market's been doing from October through December, it's all very dependent on what the market's doing. And to come out with profits in the last 3 months is basically a testament to a good strategy and a good methodology. This was a September. This was September 2024. I just want to show you that we have losing months. This is 1 month we had a terrible month, September 2024, 62% win rate, 8 wins, 5 losses, down $1,786. So just so, and the only reason I highlight this is just to show that we do take losses. All right, I'm trying to be transparent about this. Okay, so the alerts, this is what the alerts look like. You'll get obviously have the date. It'll have this instrument. This was Nike. This is when it'll say buy April 11th, 67 puts. So what you got here is buying, this is expiration date, April 11th, 67 puts. That's your strike price and how much to pay for it. And that would be the whole alert. Then you get another one that'll say same thing, and then it'll say sell order for $9. And then you get another one when we sold it for $9 on April 3rd. Now you could get other ones that if I adjusted the sell order to a different price, $8.50, $9.50, whatever. Right, so that's what they look like. All right, and how do we achieve the stunning results? I think I've gone over this already, right? We know when the institutions are driving a trade and when the market internals are heavily bullish or bearish, and we take advantage of it. And what do we look for? We look at momentum as the main thing. We also look at trend. We do look at some money flow in the calculations, but this is the main thing is momentum, and that's what we can eye, and that's what we can see. Right, so here's a SPY trade. I'm going to run through some of these charts, but again, these are the same things you see. If you buy the software, you'll get a chart that looks like this with the high volume candles and everything on it. You'll also get another template you can use, which just shows current time frame momentum. This is for folks who are just interested in intraday trades only. I mean, I use the main one when I'm doing all my intraday trades, but if you just want one, it just shows intraday. It comes with the software. All right, so here's the SPY super system. This was a Heiken-Ashi reversal candle right there, back a year ago. Took it right there, and I don't even know how much we made on this thing, but you can see the run on this Qs was pretty significant. I mean, it started at around 532 and down to 529, 528. That's a pretty big run in the Qs. So I'm just going to run this quickly. This is the SPY super system. These are the intraday trades, the SPYs and Qs and IWM. I put this together after I started this back in 2024 of how I did on the SPY super systems. Again, these are my results. I don't know if you would have been able to match these or not, or do better, because I get people in the room that do better than I do. But you can see the number of trades is pretty high. August 56, 6 and 2. But again, I've never had a losing month with the SPY super system. But on like Friday, I didn't take any. I mean, there was just no trades to take. All right. So big profits. I mean, I have never had a losing month in this, and the profits were big. But these are quick trades. You've only got one trade on at a time, and you got to watch it typically, unless you put like an OCO on it. You put it, one cancels the other on it. But you're only going to have one trade on it at a time. All right. And again, I'll just show you a few more of these trades. 5-minute chart right here on the SPY super system. Get in right here as the current time frame went blue, from red to blue. Took it there and wrote it up right there. It's about $220 of profit. That's a lot for a SPY trade, by the way. Typically, you're only going to see somewhere between $75 and $120 profit before it reverses back. Another one here. This was a very quick trade, SPY super system trade. Notice selling, selling, selling. We're only looking at the 5-minute right here. Same thing on the modified layout. Modified layout with selling, you get out right here. Get another SPY super system. This was $120 profit. This was the IWM. Somebody was asking about the IWM. This was a trade on the IWM. Breaking down below the VWAP, institutions selling, you take it right here. Now we have high volume candles. These would be a lot more obvious now than they were then. Right, and these are some trades we took recently. This was a line. Now, this was going to be a swing trade that I sent out on alert, but I closed it after an hour. We're up 51%. I just couldn't give up the 51% and hold it overnight. So I took it. This was URGN. This was a swing trade. Okay, selling, buying, compression, breakout above the 15, ride it up. Right, so this, again, this was NVIDIA. I showed you that one already. This was SMR. This is Nike. This is the big one we made 216% on. This is where we get in. It's compressed. We stayed in the trade because everything was selling. We took it and we took it on this gap down. Open the market opened, we get out. And we took one of the things I teach in the room is gaps are gifts. If you get it long and if you're long a stock and it gaps up in the morning, take the money. If you're short and it gaps down, take the money. Gaps are gifts. They're giving you money. Could it continue? Sure, it could. But that's the least likely thing to happen. Most of them, they'll either gap and crap, which gap and turn around and go down, or they'll gap and chop. Gap and goes are the least likely. And because you get a gap up and a gap down, the premiums will be inflated because of implied volatility will have been increased. Right, and this is wrapped up. And again, I'm not going to go over all these. I think we've looked at enough charts. So I don't think I have to prove that we've had really a lot of good winning trades. Again, so here's the swing strategies in the room. Here's our intraday trades, SPY super system trades on the SPYs, Qs, futures, even stocks, and OOMCAT high momentum, high volume trades. Those are our methodologies right there. Okay, and here's the offers. Again, in the chat box, they should be there. Let me look, see. I think Rory put them. Yeah, Rory put them in there for these offers. So what you've got here, this is the trading room and the alert service, right? Again, you can get a 2-week free trial, and you can cancel anytime. That's going to include the SMS of text alerts, which we haven't been doing a lot of here lately. You'll also get access to the trading room, which I'm in every day from market open to market close. I take about an hour for lunch, but I'm pretty busy in there because people are asking me about trades all the time, and then I'm identifying trades and telling you trades that I'm taking, right? And then you'll get access to all the trading videos. I've got about 31 of them, and also a private Discord chat room. And then it reverts to $396 a quarter, right, for the quarterly membership. If you want an annual membership, because this obviously saves a lot of money, the text alerts, the trading room, obviously you get also the training videos and the Discord chat room. Same as this, except here you get it for the whole year, and it's much cheaper. And you can also do a one-time for $23.96, by the way, to get access to the room and the alerts forever. And again, that text alerts, the room, it's the same thing. You get the videos, all the videos in the Discord room, $23.96. So, I mean, that's a cheap deal, an inexpensive deal for the room and the alert service. Now, the software itself, the SPY Super System software, here's the SPY Super System software right here. Annual membership, this is what you get it for a year. You get the SPY Super System software. If you just buy this and not the room, you'll get a month in the room for free to test out the room. You'll also get the scanners, of course, that I showed you. You get all of my training videos, and it'll be installed on Thinkorswim for you by Rightline. They'll just take over your machine and install it on Thinkorswim. You don't have to pay for Thinkorswim. You can just download it, and they'll put it on there, right? Or if you get Ninja, they'll put it on Ninja for you, right? And that's $14.98 for a year for the SPY Super System software. That includes the high volume candles, all of the indicators, everything we looked at, and any true changes that come along. Then there's a one-time payment. You can buy this. This gets you forever. $19.98. You own the software. You don't have to be in the. You don't have to come in the room if you don't want to. You can just trade on your own. But you'll have all of the indicators and the high-volume candles and all of the SPY Super System indicators to use. If you do this for one time, you get 3 months in the trading room for free. You get obviously the scanner. You get everything that comes with the software, right? $19.98. So that's the ultimate deal. And then you can go off and trade on your own if you know how to use it. I mean, this is one powerful piece of software. When I bought it, it really, and I did buy it. I wasn't even part of Rightline at the time. I bought it myself, and it made a huge difference in my trading. All right, so there's your offers on the trading room. And again, if you click on the chat box, the links are there. All right, and this is for the software. This is the SPY Super System software itself. Again, this is what drives our results. Knowing what's going on with the institutions, all right? And again, I did a little return on subscription investment. This is basically over the past 3 years. For your return on ROI on your subscription costs is about 40 to 1, 40 times what you paid for your subscription costs based on the quarterly, so the most expensive. Obviously, it's a lot higher than that if you took an annual. Again, annual profits have exceeded 40 times the subscription cost. Subscription cost has consistently paid for itself many times over. Again, high ROI. The ROI has been excellent. Simple math, proven results. And this doesn't even include the SPY Super System and the OOMCAT trades. And those trades which you take on your own are dramatically better as far as I'm concerned. But this is on the alerted trades and on the trades I posted in the room. But again, past performance is not indicative of future results. Remember that. Trading involves risk, a lot of risk, and individual results may vary, right? But this is what we've done in that. So there they are. Again, I'll show you that trade one more time, just because this was pretty exciting on Frog. Again, to see, so you can see exactly what this OOMCAT trade, how this OOMCAT trade worked. All right, here's where I took it, right there. 405, I think it was 210. I took it right there. And this candlestick, I got out down here, and that run on an OOMCAT trade went from $30 a contract to $200 a contract. And it's because momentum and high volume. You're getting institutions selling, and they're selling hard. They're selling hard here, and so that's the high volumes and the high volume candlesticks, and the right here you've institutions selling. It's telling you you're getting the maximum amount of selling, and it stayed right below the 8. And again, these are, you've got to find these. Do not take out of the money puts and calls if the particular setup doesn't indicate you should. Okay, so there you go. That's complete. I hope you found it helpful. I hope to see some folks in the room. I highly recommend the software. Obviously, like, listen, I'm not a professional. I'm not a professional salesperson, and I'm also not a professional presenter. I'm just a trader. I've been trading for a lot of time, 17 years full time, and I'm just trying to present what I know for me and for an awful lot of people it's just an outstanding way to trade. And I think, you know, for a lot of people, this can change your trading trajectory, your trajectory. You can become consistently profitable if you stick to the criteria. A lot of it's up to you, right? I can give you the information, I can give you what you need to do it, but it still comes down to individuals to do it themselves. Okay, thanks everybody. I appreciate it so much for being here today. Have a great weekend. Thanks for spending so much time here. It was a fairly long presentation. All right. Thanks, Alan. I appreciate it. Appreciate it very much. Hope to see some folks in the room and on the alert service next week. And really seriously consider the software. You got to invest if you're going to become a profitable trader. It's just like anything you do, anything you're educating yourself on. You've got to have the tools to do it. All right. Have a great weekend. We'll see everybody back here hopefully on Monday, or at least a lot of you. All right. Have a good weekend.